Hey folks, welcome back to the channel. It's Liquid here, and today we're just going to talk about the US and Canadian stock market, looking at some potential price targets going into the next couple of weeks. First of all, looking at the daily chart for the S&P 500. Last weekend, I mentioned because of the huge run-up, we were likely due for a drop to pull back to these EMA lines, and it looks like that's what we did, almost to the blue line. And then the week before that, I mentioned to stay bullish because of this gap here, and it was likely the market was going to go higher, and that's what happened as well. So now that we are here at about 5,800 for the SPX, where are we likely headed next week? Well, first of all, keep in mind Monday is a holiday, so we have 4 more trading sessions until the end of the month, and the short-term momentum is still down. So if I were to draw a support line going from the low to this point on April 21st, where the price came down, you can see we're pretty much at that line right now, the support level. And because the long-term trend is still going up, it's safer to assume that the bull trend is still in play, at least the longer-term one over multiple months. And I mentioned this last week as well, but after the pullback, it would be prudent to expect a bounce, and very likely that's going to come in one of 2 different ways. The first way is a bounce right at this point, meaning on Tuesday, the next trading day, we see the market go higher, and the price will want to reach this middle line up the channel here, this dotted line. And once it gets past the most recent high, then the next target is the top of this channel. So that's pretty bullish. The other likely scenario is also bullish, but we'll see the short-term downward momentum continue for a bit longer. And instead of bouncing at 5,800, it might bounce at around 5,700. And that is because after this support level, if it breaks it, we do have a fib line. If I draw it from the bottom of the swing low to the most recent high, this fib line here, the red 236 line, which is at 5,700, and that is most likely going to coincide with the 50 EMA, which is this red line that is curling up, and also the black line, which is the 200. And that is the most important moving average line out of all of them because that's the longest one. So as long as the price remains above the 200 EMA, I'll just make it a little thicker so it's easier to see, then the bulls are still in control. So the other likely scenario is the price drops a little bit more first, gets to roughly 5,700, and then we bounce from there. And then it's the same kind of deal, except it's going to first try to get back into this blue channel, this one here, after it broke out to the downside. And then once it gets in here, it'll try to get to the middle of the line and then eventually the top of the line. Because as it stands right now, I think there is a higher chance we're going to see this all-time high tested back here at roughly 6150. It's more likely it's going to go there first than to just head directly down, surpassing the low point back in April and then having a big crash. We might still have a crash, but it just might look something like this first, where the market goes up before it crashes. This is a common price action that happens quite often in not just stocks, but also in other asset classes like cryptocurrency. Here we can see the 2021-2022 peaks for Bitcoin. The price went up first to about 64,000, went down, but a few months later it came right back up to about 69,000 before having like a 70% crash. And fast forward to 2025, basically today, it looks like we're seeing something similar. There was a peak, or in this case, a double top peak, came down, but a couple months later, it's come right back to the top, and now it's made a new high compared to that. So if history were to repeat for Bitcoin, then we would expect at least somewhat of a pullback, if not a big correction from here. Plus, as you can see with this green line that I've marked here as resistance, if I go to the weekly chart, you can see it's hit it 1, 2, 3, 4 if we count these two as together. And then now it looks like we're going to hit it a 5th time. And the odds are it's going to bounce off of this green resistance line because it could have broken through it all the other previous times, but it didn't. So why would this time be different? Especially when the economy is expected to slow down because of all the tariffs. Now, I wouldn't get bearish on Bitcoin just yet because one, we're still not at this line yet. It could still go up for a couple more weeks. This is, again, the weekly chart, and it could hit like 115 or 120,000 even if it peaks over a little bit. And plus, the price is still moving up right now, so the momentum is still upwards. You can see on the daily chart, it's above the green EMA, which is the 9-day EMA. So eventually, Bitcoin will have a correction, and it might have started already. But the current trend is obviously still going up, so you don't want to short this just yet. But besides that tangent, I just wanted to point out that it's very common for the market to make a new high compared to a recent top and then go down a lot. So that is something to watch for in the S&P 500, which is why I think the stock market will, at least in the medium term, continue to push itself upwards, likely to retest the all-time high back in February, and then maybe even surpass that, go higher, and we'll see from there. But for now, we are still below the all-time highs. And although it's possible for the market to just crash right now, I think it's more likely that it's going to find some sort of support in this area and try to bounce higher. And that's because there are so many EMAs here. There's also a fib extension here. And of course, there's this bull channel here that's been going on since the beginning of April. So unless it breaks down through all of that, I would continue to remain bullish and target the all-time high level here. Now, even though the S&P 500 isn't at all-time highs, there is an index in North America that did recently hit an all-time high, which is the TSX. It peaked out last Tuesday at roughly 26,000. And if I go to the monthly chart, you can see that is quite impressive. It's just gone mostly up the entire time since the 80s. And just like US stocks, whenever there is a pullback, it would be a good buy the dip opportunity, especially this last month here in April, where it fell over 10%, and before the end of the month, pretty much gained all of that back. So going back to the daily chart, a very impressive run from the recent April low of, looks like 17%. So that's pretty commendable for a lower volatility index than the US large caps. Now, in terms of where we go from here, of course, we have this resistance line. And depending on the next week, if the market goes up, then I would expect higher prices. But if the market drops down below this line and goes lower, dropping below the green EMA, then I would expect lower prices. More medium term, we could get something like what I would expect the US stock market to do, which is to go up a bit, reach all-time highs again, and then drop. Now, it is more likely for the Canadian stock market to drop first or to make a larger correction earlier than the US because the fundamental of the Canadian economy does not look that good compared to the US. For example, our unemployment rate is 6.9, and I think the next read for May 2025, we're going to see something above 7. So with an unemployment rate of 7% or higher, that's basically a recession for Canada. Also, when we look at the long-term unemployed in Canada, this is for the entire country. For people who are unemployed for half a year or longer, we can see there's this huge spike recently, which started a couple years ago, but it's really reached into the stratosphere now, and it's approaching the 400,000 mark. If I zoom into just more recently, you can see there was another peak where it climbed up really high in 2020, and of course there was a recession there, albeit short-lived. And the 2008-09 recession also coincided with this steep run-up in long-term unemployed. Now, Canada's GDP fell 0.2% in February. Next week, we will be getting the number for March, which is the final month of the quarter. And then we'll get an idea of what Q1 of 2025 looks like. Economists are expecting 0.4% for the first quarter. We'll see how it goes. I have a feeling it's going to come in a bit lower than this. And if it does disappoint to the downside, then there might not be much room for the Canadian stock market to run up. So basically, consumers are not doing well. The economies in both countries are slowing down. However, because the multi-week medium trend is still going upwards, we have to expect prices to continue moving up until they break the support line here, which on the TSX could happen sooner than the S&P 500. But it's worth looking at both because the two economies are very intertwined. Now, once we get a break of the bottom of the channel, I still wouldn't be bearish until we get a retest of that and a breakdown from there. So it could look something like that, but that's still going to be pretty far away. So we'll just take things as they happen, one day at a time. Anyway, that's it for now. Thanks a lot for watching. Good luck with your finances, and I'll see you in the next one.